Okay. All right. So, like I said, what we're going to start out with today is we're going to start out with a couple of the chapters. I'm going to do a couple things real quick through those. There's nothing that are in these chapters that have anything to do with the final. So they are, pretty much just some additional things for information for you. I'm sure these last two chapters to read aren't very exciting, especially those ones that read the chapter on ethics and everything like that. Unless you're that person that enjoys reading law books, you probably didn't enjoy that one much. I forget what that double S is called. It's a Latin term, but you could obviously see that was pulled out of all the code of everything. Okay. All right. So let's take a look at the material that we're going to talk about. All right. So a couple things we're going to start out with. We're going to start out in chapter 17. All right. It's just kind of a miscellaneous chapter. It just kind of covers other taxes. It's if you will, it's just kind of that catch-all that says, hey, these are some things that might happen or that you might see. We're going to talk about the alternative minimum tax. Alternative minimum tax is interesting because in 17, it does occur. There's the thresholds. It's kind of that thing, if you will, that somebody has a higher income and you get their taxable income netted down, you calculate their tax, and the IRS takes a look and goes, I don't think they're paying enough taxes. I think I'm going to add a little bit more to their tax bill because they need to have a little bit more. So, that's where the alternative minimum tax comes in. For 18, some of the things that would trigger an alternative minimum tax, some of the thresholds and some of the calculations and different things that go on, you're probably going to see a lot less of that going forward. So this is for those higher incomes. That's kind of one of the ways that the new 218 tax law, that alternative minimum tax is probably going to help them lower their tax or give them a tax break. We got the Kiddie Tax. It's a tax that we just end up paying for those kids that have unearned income over thresholds that we'll see. And then you can kind of determine if you're going to pay it at their rate or at mom and dad's rate and ones that triggers. Oddly enough, this is a one for 2018 for the tax code that has a good chance of increasing the Kiddie Tax. So we'll know that, okay? We talked a little bit about unreported Social Security and Medicare when we talked about unearned income with tips. So we'll have that. Household employment tax, we're starting to see a little bit more of this. As I told my classroom sessions, we have where this is being a little more common in this day and age of the cost of nursing homes. A lot of people end up staying in their homes and hiring somebody to come to their home to take care of maybe an elderly parent or somebody that is ill or has medical needs. There's a lot more of that. Once you do that, you schedule somebody to be there and you develop an employee-employer relationship. That's where that household employment tax, you have to be a true employer and you have to pay those Social Security, Medicare, such taxes, okay? First-time homebuyer credit. We do see this one. People are still paying that back at $500 a month. It is something that still happens. It was a very odd credit and a very bad idea, and a bad idea that was made worse by the way that they changed it. Basically, there was about an 20-month window where if you were born under a full moon in March and your zodiac sign is Pisces, that you got this tax. But if you were born in June in a waning moon and your horoscope is Gemini, then you didn't pay it back. So it's just an odd tax, and we'll talk about that, okay? Additional Medicare tax, that was something that came in with the ACA. It's a tax that was, again, on higher income to help support what they were doing with the Affordable Care Act, okay? And then we'll just kind of let you read the net investment income tax and tax withholding and estimated. We're going to talk a little bit about estimated, more so in the problems that we'll take a look at, but, for those, okay? All right. As we said, there's some other taxes, and basically it's a catch-all for those miscellaneous things that we don't see often. A couple that they point out here, again, self-employment tax. Realize that that's that tax that's calculated on that net income from a Schedule C, or if you have a partnership K1 coming over, you're going to pay self-employment tax. You're going to pay your Social Security and Medicare on your personal return because you're not a W-2 employee. It talks about additional tax on IRAs. Again, back to Chapter 9 when we talked about retirement plans. If somebody does something that causes excess contributions or they take a distribution prior to 59 and a half, it may trigger that additional tax on an IRA. Healthcare, as is the politically correct term, the individual shared responsibility. We talked about that from 16. That's that tax for not having insurance. This is not the part where you put in where they may have to pay back some of the subsidy or credit. This is where you would calculate to see if for not having insurance, how much of a penalty they would pay. And again, we have, our position with EG taxes, we use that 8965 to try to exempt everybody out. Okay. All right. As it says here, we're going to start with the alternative minimum tax, and it says under the tax law, certain tax benefits can significantly reduce a taxpayer's regular tax amount. This applies, and then the AMT applies to taxpayers with high economic income by setting a limit on those benefits. It helps to ensure that those taxpayers pay at least a minimum amount of tax. So again, when you're doing things on the tax return and you're doing them within the tax law to reduce their taxable income and their taxes calculated, based on those, we turn around and they have a little calculation and the IRS says, that's too low. We're going to add a little bit back to that tax and you're going to pay this amount. And again, we see that with higher incomes, okay? So just know that, it's going to calculate that it is a tax, again, that is set, as a threshold. And some things that it says here, you can see some common adjustments and limitations. These are things that may trigger a alternative minimum tax. So somebody a lot of times that has a higher income may have the opportunity to do some more things on their itemized deductions. So that may be where it triggers the AMT. But now we're going to turn around in 2018 and some of the itemized deductions, we talked about the 2% job expense, 2% of the AGI job expense, that's disappearing. The cap on state and local, or what they call SALT, state and local taxes, the cap of $10,000 on that. So some of these things that, typically would trigger the AMT because of the amount that showed up on the tax return in the calculation of the taxable income and the tax. Some of those have been changed, so that's where it's going to affect the AMT. Okay. You can see here, this is the 6251 that you do the alternative minimum tax on for individuals, and you can see line 1 through 28. Basically, those are all the things that we're just talking about. And for the form, when you see the form, or you maybe go in and take a look at the form and tax-wise, you can see a lot of those lines are carrying over for some things. Again, it's just some things that maybe somebody was able to do because of their means to lower their taxable income, and the IRS has deemed that they took too big advantage of it under the tax law. It's not that they did something wrong, it's just that they don't want them to pay that low of taxes. They'd rather have them pay a minimum. Okay. Kiddie tax, as it talks about here, just know the kiddie tax is basically a tax on somebody's unearned income. As it says here, there's 2 rules to follow. If the child's interest and dividend income, including capital gains distribution, total less than $10,500, the child's parent may be able to choose to include that income on the parent's return rather than file a return for the child. If the child's interest, dividend, and unearned income total more than $2,100, part of that income may be taxed at the parent's tax rate instead of the child's tax rate. So basically what this is when somebody is a dependent or a child on the return and they have income from sources that are unearned. So again, unearned income. And so, if they're working at to use a local New York, local Western New York twist, they're working at Tim Hortons and they have income while they're going to college, that's not subject to the kiddie tax. However, if they're not working and somebody set them up in an investment account, say grandpa said, hey, I bought these stocks and bonds and stuff like that, to pay for young Susie's college education, and they're in her name, and she cashes them in and she has some interest and dividend or capital gain income from that, then she would be subject to the kiddie tax, okay? And again, it goes through and talks about when the parent can elect to have that tax go on to their tax return, okay? You see this sometimes, don't see them that often. I'm thinking of about the 12 to 1,500 tax returns I do a year. I'm thinking that I have probably about 8, maybe 9 clients that this kicks in. So there's for various reasons that it can be on there. But, again, it's just something that you have to be conscious of. And when you go to do somebody that is dependent on somebody else's return, and their income sources are coming from a unearned source, then you need to make sure that you do the 8814 and the 815 for that. Okay. Let's see here. I talked about the unreported Social Security and Medicare tax. That tax, some of that thing really relates to what we talked about back in Chapter 3 on earned income, especially for those that have tips. So that's where you will see that one most often. Household employment tax, again, a household employee, as it talks about there, kind of goes through a little bit, talks about, you see the examples there for somebody that is considered household work and done around the home. Babysitters, if you have somebody that, as it shows in the example, is a babysitter that's there to take care of the child and do light housework 4 days a week. There's specific instructions. They provide the equipment. They may set their schedule, say you have to be there Monday, Wednesday, Friday at 8 a.m., things like that. They really are a household employee because you've developed an employer-employee relationship. So that's where they would be subject to this household employee. And again, you can see down there that it talks about health aides, caretakers, private nurses. Like I said, sometimes people say, I'm going to keep mom and or dad at home, and I'm going to have somebody come in and take care of them. A lot less expensive than them being in a nursing home. Maybe hiring somebody that comes in so the individual can work, and you pay them to be there, to be the health aide, caretaker, private nurse, and it may be a lot more cost effective than what it might cost for somebody to be in a nursing home. Okay. All right. It talks about the Social Security, Medicare wages and such. Basically what that Schedule H that you see here does is that is really the forms that somebody's employer would do. If you're a W-2 employee and your employer has to do payroll tax, very similar. This is very similar to the form that they would do on that. It's just that you being a household employer, you have to do this because you need to pay in to match and show and give information as far as the employee that you have in the house. Okay, so again, it's like you're doing your payroll taxes because you're an employer on your tax return. First-time homebuyer credit repayment. Again, I talked about the whole window of when you have to pay it back, when you didn't have to pay it back. As it says here, the first-time homebuyer credit was available to individuals and couples who purchased a home as their primary residence after April 8th and before May 1st, 2010. Okay? As it says back here, homes purchased in 2008 must be repaid and takes the form of a $7,500 interest-free loan. Okay? All right. So what I'm saying there is, if you purchased the home in 2008. Now, homes purchased in 2009 prior to November 7th, the credit was for a maximum of $88,000 with some exemptions, does not have to be repaid. okay? And it was only for new homeowners that had not owned a home in the prior 3 years. So beginning November 7th, 2009, an additional category of new home buyers, longtime residents who owned their homes, was added. The credit for this group was a maximum of $6,500 that does not have to be repaid. So as you can see here, I have several people that come in, and this credit just frustrates the heck out of them because they were a young couple and back in 2008 bought a house, and their friends turned around and bought a house in 2009. You know, one of them had to pay it back and one of them didn't. So it's just a very odd credit, and again, it's gone. But you know, people are still repaying it. It is one you have to be very conscious of. I encourage you, you know, as somebody that you know, maybe has a home, that you, when you go through the return, to kind of do a little recap for them and say, hey, you know, these are some things, and this is one of the credits I always make sure. I said, you know, especially for newlyweds, I said, you know, nobody had any first-time home buyer credits they're paying back. Some of them go, oh yeah, I forgot about that. Or a new client, it's one of those things that slips the mind because it's a once a year thing, and a lot of times people forget it, and if they forget it, they will not issue their refund until it is filed. So it is one of those things that can delay somebody's refund. So it's important that you kind of make sure you ask them about that. Okay. The credit, there's the form for it, the 5405. One thing too is that there's a little thing down at the bottom to make yourself a little bit familiar with, because that first-time home buyer credit, sometimes I have to use that if I have two separate people that get married. One of them had the first-time home buyer credit, but they sold that house and then combined their residence into the other house that is not subject to the first-time home buyers. I have seen that delay refunds. So make sure that, you know, if you do that, that somebody make sure that they fill out that bottom portion to say they no longer own the home where the first-time home buyer credit is attached to. We talked about the additional Medicare tax. Again, that 0.9% really that it comes under is from the ACA. It was a way for them to tax higher incomes and make sure that they were helping to support the Affordable Care Act. All right, and I talked a little bit about net investment income tax. You just don't see those. Just make sure that you're familiar with it. Again, you know, most of those, you're not going to see anything on those. I don't think I've done one in the last 3 years with anybody in any of the returns that I have done. All right, a little bit about tax withholding, and a little bit about mainly what I want to talk about here is estimated taxes. As far as withholding, you know, you have to be a little bit of a financial advisor. People are going to ask you about the W-4. I don't know if anybody read in the news, but they just finally got it done and reissued W-4s that they updated from the tax withholding tables that changed back in February. So really, everybody that was filling out W-4s in 2018 were using the old W-4s with the old withholding tables, and their tax was being withheld at the new thing. So basically, this is where we could see a lot of difficulty with the tax returns because people were filling out forms that were really outdated. So the IRS has finally got the new W-4 out. And I always stress to people, and basically the W-4 is, when do you want your refund? For those people that don't have those large refundable credits, you know, an EIC or a education credit or something like that, basically what this is doing is we're trying to figure out, when do they want their tax refund? When do they want that money that is withheld from their pay and that is excess for their tax bill? When do they want it? Do they want it in their paycheck, or do they want it as a lump sum at the end of the year? So that's really what the W-4 is. They're deciding when they're going to get their money, okay? And as it talks about, there's some things that, you know, personal and financial changes. These are a lot of things that, you know, you have to take into account when you ask them about their, you know, sometimes people get married. Well, when they're combining two incomes, do they need to go to married zero on their exemptions, or do they need to say single zero because they're a higher income, okay? So you need to take those into account. Some people will change their income because somebody went to college or an addition of a child. or different things that went on, and sometimes you have to change it a little bit because they have income that is not subject to withholding. So sometimes their job is the only way outside of estimated taxes that they can make sure that their tax bill is covered. Okay? And the other thing I stress with people, withholding, just because you signed a W-4 many moons ago when you were first employed with your employer, doesn't mean it's set in stone. You can change it anytime you want. Okay? The HR or payroll person may not like you because you're going to create a lot of work for them, but you can change it anytime you want. A lot of times people will do that. Clients I have where they work for an employer where they get a large once-a-year bonus, they don't like it when the IRS takes and taxes at 40% of it. I inform them that they're still going to pay tax on that one way or the other, but they get that bonus, they'd like to see a big check instead of saying, oh, there goes, I got half my bonus because the IRS took the other half. Well, if it is excess, they will get it back in their refund at the end of the year. But some people, they change their withholding because of that bonus, and then we just have to stress to them, don't forget to change it back. There's an employer in the area that hands out these bonuses in February, and I do have clients that come in and I look at their withholding on their W-2 and I say, you forgot to change your withholding back. And they say, why? Because it was not withheld the rest of the year. And so they get caught short on that. Okay? Hold on one second. We got a question coming in here. Who is eligible to file exempt? Good question. Really, anybody is. Again, the W-4 is an odd animal. People will think that they have to do married zero because they're married. They don't. They can do single zero. There's no restrictions on there that just because of the filing status on your tax return that your W-4 has to be filled out exactly the same. Somebody can go exempt. Like I said, you just asked a question and I just kind of went through with the scenario with the bonus. Some people say, well, I'm going to go exempt next week from withholding because I want my entire bonus. Well, then they have no withholding. But like I said, then I see them come in to do their taxes and I go, boy, you must have liked to had your refund all year long because now you owe the tax on all that money. So, that's where that comes into play. Okay? All right. There's a little Irs Withholding Calculator. That is up to date on the website. Like I said, the W-4s were not, but that is up to date. Okay. Estimated taxes. It talks a little bit about who should or should not pay estimated taxes. Again, it depends on if somebody has a balance due and they're running this balance due pretty commonly every year. It's a good idea to start talking about estimated taxes with them to avoid any penalties. There's some scenarios there where it talks about some people do not have to file estimated, but it's always a good idea because the IRS likes to have its money timely, as it says. Now, I understand this is a contradiction because they don't seem to want to get your refund to you timely, but they do want their money timely. And what that means is if you're self-employed and you've been making income throughout the year, it's a good idea that you must, get that money in a timely quarterly estimated method. Okay. All right. So we have that. Okay. So that's the estimated. We'll talk a little bit about that. We see the federal and state tax paid on some of those things there and some problems on that. Okay. So that's chapter 17. All right. And chapter 18, okay. I'm going to go through a few things here on this. Amended returns. We're going to talk a little bit more about the amended return when we actually do something within the problems that we have. As far as the ethics and everything that is in here, again, this is really just for your knowledge, if you will. the third-party authorization, when you're doing taxes through EG Tax, that third party is Esther, because you're doing it as a tax preparer under EG Tax Service. So Esther Gulius is your third party on that. So she's the one that's listed on there because everybody's preparing returns in her name for her business. You obviously will get your credentials to be a registered tax preparer and have your PETN and New York PETN. I always tell everybody that the tax preparer's PETN number, that ID number you get, is so that you're not putting your social security number on the bottom of everybody's return and handing it out. Obviously a good idea because of this day and age of identity theft, but that is where your credentials, and then somebody will know that you are credentialed with the IRS and or the state where you're doing tax returns. Power of attorney, we do that sometimes. The 2848 I will do on occasion when I have somebody that I'm working with an audit or they have an IRS letter. I'll get that power of attorney. It allows me to contact the IRS and talk to them about the tax year, the tax issue, without having to constantly get the client on the phone and doing a conference call or have them traipse into the office in a snowy Buffalo day. So it allows me to do that a little bit more so, okay? As far as the tax preparer, you basically are the one that is signing the tax return as a tax preparer. Your name will be on the bottom. Again, Esther is the third party. To register, the following, it talks about persons who are not tax return preparers. And as you see a lot of this, it's the volunteer, nonprofit, you're doing through VITA, a program the IRS has, or you're doing, you're going and sitting at the church and doing taxes for free, helping people out at your church or whatever it may be. So those are people that do not have to have that credentialing that they have that we're talking about that we're going to go through there. Preparer tax identification number, that's the PETN that I talked about. Everybody will sign up for that. As far as continuing education, everybody always asks about that. A lot of the states have continuing education, but on the federal side, for the PETN to be a federal tax preparer, the courts kind of threw that out. So you don't have to do continuing education to remain with your credentialing for the federal. Now, there are some other levels where you do have to do. There's a program where you can be somebody that can represent a client, and then also Esther, Chris, Tiffany, some of the tax preparers here are enrolled agents. What enrolled agents are is basically one step short of being a tax lawyer. So they have a different level of credentialing. They have to do that education portion of that so that they have that. Okay. All right. Let's see here. A lot of the ethics stuff that you saw in this chapter, and again, I apologize that it was very dry reading because a lot of it is pulled right out of the tax code. Like I said, it has that funny little double S thing to show that it is an official. Okay. All right. So that they have that on there. So we have those as registered tax preparers, the laws that govern them. And basically what this is saying is, that you have to complete the return to the best of your knowledge. I always tell everybody in class or when people are getting ready to work for us is, we are going to back you and cover you that, somebody's bringing in all the information. You as a tax preparer just have to make sure you ask the right questions and say that, hey, this is what you need to know. Okay. All right. All right, so we have that. Okay. All right, so we have that. There's the enrolled agent that I was talking about, that we have several that have been enrolled agents, or are enrolled agents, I should say. Okay. Again, a lot of this ethics stuff has to do with things that relate to, just making sure that you're doing everything and accurate and complete to the best of your knowledge. Okay. All right. We got a question in here. Hold on one second. All right, somebody's asking, can you explain our liability if we make a mistake preparing someone's return? Again, the way we do it is that, when somebody signs off on a tax return and we have forms that they sign that is a truth disclosure, and basically it says you have provided everything accurately and completely to the best of your knowledge. So we have them sign off on that. That's something our lawyers look at and such. And, that's where, we're basically saying to the client, hey, you disclosed everything that you know to me. And again, your obligation as a tax preparer is to make sure that you ask the questions about, your due diligence. And that's why those forms, especially for the EIC and the child tax credit, those refundable credits, there's all that due diligence. That is basically where, if you will, that your liability is there. If there's a mistake on the return, as far as something that maybe was misentered or things like that, our stance is that the taxpayer is still responsible for paying the tax. Esther will pay the interest and the penalties on anything that would come from a notice. So she covers you there. So you're covered on that as far as the liability. However, I will say that, we pay about $12,000 to $15,000 a year on interest and penalties based on things that maybe were not put in there correctly. And that's where, supervisors or people that you'll work for, things like that, a second set of eyes may look over the return and make sure that it's prepared correctly for electronic filing. I know, and just for anybody that does the taxes, what I do for myself, based on the tax forms that a tax preparer brings in, each year I pick a different color highlighter. So I think this year I'm planning on, I haven't decided between blue and purple, but I think I'm going to go with blue. And I will make a mark of some kind that I put on the return or on the tax documents that they gave me that I give back to them. That is a check and balance for me. So if somebody comes back and says, hey, you forgot to put in this 1099-G for my unemployment, I got a letter and look at all this interest and penalty. I can look at the form and say, I didn't see that and didn't touch it. I don't have a mark on it like I do. So that's a way for me to kind of have checks and balances. Sometimes tax preparers, the way they staple things into the back of our client packets, they'll staple things together. People will bring in documents and there's no staple hole. We're going, we never saw that. But again, we're not saying that the client's always wrong, and we're not saying that the tax preparer is always wrong. But it just gives you a way to say, I don't think that document was brought in, okay? And then that way we can say, okay, we will amend the return for you. This is the tax that is due, and then, here is your interest and penalty, and then we make the decision, do we owe it? Or is that something that is the responsibility of the tax preparer? So kind of a long answer saying that what is your liability? We'll cover you. We'll cover you, okay? A lot of us have errors and omissions insurance that we cover everything for in instances like that, okay? Good question, though. Very good question. All right. Again, a lot of this just relates to, again, ethics thing. If you're saying, oh, yeah, well, let's just not do those mileage things on your Schedule C because look what it did. It cut into your earned income credit and your refund. Well, then that's things that are knowledgeable. Or if a client says to you, oh, I had, I bought $1,000 worth of supplies. And then you put it in there and they see that the refund dropped and they go, well, do you have to put that in there? I don't want to. Well, once they've handed you to the receipts and the disclosure of it, it's now part of the tax return. You can't just take it off because they don't want it on there. Things like that. Those are things that you need to make sure that you do. Okay. All right. Again, a lot of things in here about who can do what, who can advise who, things like that. So again, a lot of the stuff really is for your knowledge. It's not as much chapter to scare everybody. I have some people that are in my classes that'll come in and they'll look at this and they'll see all these penalties for everything. Again, once you're in the offices, once you're working for us, we have several policies and procedures that we have in place that you will be trained in. And a lot of the stuff that you see that is on this page are defaulted or hardwired into the return, if you will. We'll talk about compiling to make sure that you have the return signed, that you give them a copy, things like that. That's all of our policy and procedures, okay? And again, some of these, like I said, if we find that somebody is, knowingly helping somebody, we actually had a great increase in business in one of our offices, because come to find out, the gentleman that was running the tax office was helping people fraudulently get the EIC. And then on the flip side of it, because a lot of them had no bank accounts because they had seizures of their bank accounts for one reason or the other, that he was having them send the refunds to him, deposited into his account, and then he would write them a check to pay their refund for a small fee. Well, obviously that's illegal. You cannot do that, okay? All right. Some of the penalties that they talk about, those are the late penalties. Again, we've talked, we're going to talk about amended returns, just like an extension. Yes, you're doing that to maybe because of a tax liability that came up. Just because you're doing an amended return or you did an extension doesn't mean it gives you more time to pay. Both those cases, if you're making a payment past the tax deadline, then you're still subject to tax penalties and interest no matter what, okay? All right, so that gets us through those two chapters. Any questions on anything? Any questions there, okay? And again, for everybody that kind of joined in a little bit late and maybe didn't hear the first part, like I said, everybody is great as far as the homework. I've had a lot of people already turn in their work forms. Again, I would like to hear from you either with the work form turned in or saying that you're not planning on working for us, just so I can kind of pass that along to the powers that be. As far as the final exam, a couple people have already taken the final exam for one reason or another, so that they've already taken that. Somebody came in. I would like you to come into the office if it is at all possible to take the return here. I have about 5 or 6 that have signed up for that already, so make sure that that's the case. If you can't do that, I want you to make sure that you let me know so we can schedule a time for me to do a Zoom, a virtual exam with you. Again, I emphasize, though, that I'd like you to come in because it will be the first opportunity for me to see everybody on the TaxWise software. And as I do with my classroom, I will give you some get-out-of-jail-free cards. You don't have to worry about drawing them out of the deck. I just give everybody one of them, and then I let you, kind of help you along with things and some of those things that you might stick on a little bit. Okay? All right, so those are a couple of that administrative things. And again, in case anybody missed it, as we were going along here, as we go in, we're going to take about a little less than 10-minute break. Probably we'll come back at 10 o'clock. But again, for everybody that has been in the class, I have ultimate confidence. So as we go on break here, I will continue our song that we had. This is kind of your final day of class. Everybody will be taking their exam. I do not have cap and gowns for everybody. We don't have official EG tax cap and gowns, but like I said, I have printed your diplomas, so I am sure that everybody will be in good shape. Okay? All right, so we're going to be back at 10 o'clock. We'll say 10:05. We'll give everybody 10 minutes, and then we'll come back, and from there, and we'll go through some problems. And again, on the break, if you want to oops, loud. All right, if on the break you want to, in the chat, type in some questions besides the one that I'm going to try to address that I have received in emails, that would be great. Okay, everybody, we're back. Again, any questions that you have outside of things? I know from the emails, if you can type those in the chat, but even from the emails, had a question about somebody printing the return, the 8962 or 8965. They were not printing on there. That is just the way the default is set up with the software. I know that sometimes we have to print it. It does go in electronically. They have that going electronically, but it is one of those forms that just has a little quirk. The ACA has been a difficult thing since its inception as far as software, but those 8962s and 8965s, you do have to print those separately. They don't default in, but like I said, do not fear. They are part of the electronic file that goes in with the e-filing. While I'm thinking about it, subject to e-filing, for those of you that know people that have not filed, right now, if they're trying to get their 17 done, there's a good chance that they're going to get their 18 refund long before they're going to get their 17. Reason I say that, since about, let's see, I think it was somewhere around the 19th or 20th of November until the filing starts, electronic filing starts in January for 2018 tax year. All electronic filing for any year, current year or previous year that we could still e-file has been shut down. This is so that they can institute all the new software changes and all the things that the IRS and all the states that have filing. So you cannot e-file right now. You would have to send it in the old-fashioned way. You'd have to sign it and put it in the mail. And right now they've been running about 8 to 12 weeks on processing paper returns. So that's where that delay is going to be there. Okay. All right. Like I said, what I'd like to do, and again, if you have any questions, I'm just going to kind of do some recap on some things that I've seen on the homework, just kind of real brief reviews with the software. Again, everybody's been outstanding on understanding the tax code and what it is, and you know, answering questions on it. You know, everybody, their big struggle always seems to be, you know, where do I go? How do I get this? You know, how do I get it into the TaxWise? How do I get into the software so that I can have the software calculate for me correctly? Equally, you know, that's where your knowledge of the tax law is going to be most beneficial to you, because then you can look at the program and say, TaxWise, I don't think you did that correctly, because you know the way the calculation, you've done those exercises and actually in longhand on paper and pencil, done those calculations within the textbook. Okay. All right. So what we're going to do is I just have a return that I am going to use, and let's see here. Got way too many things open on my desktop. Okay. So I always have a return on my desktop that I just kind of fiddle with, Charlie Brown. So I just got my Charlie Brown return here in 2017, so that I have all of the you know, things that I can kind of do with what we have here. All right, so we have Charlie Brown. You know, the big thing that, like I said, you know, when you do a tax return, make sure that filing status, and if there's any dependents, okay, then make sure you get their information in there correctly. All right. You know, their age is very important because of the things that they would qualify for. Did they live in the home? You know, like I said, I always want you to check the EIC box. You know, if they're eligible for it, great, then that makes sure that it's calculated. If they're not eligible for it, it's not going to hurt anything. It's not going to cause any problems with the electronic filing. But, you know, make sure that you check it, okay? Because it's one of those ones that sometimes you may not realize somebody's eligible, and if you leave that credit on the table and they don't get that money, trust me, the IRS is not going to send them a letter and say, hey, I think you would have qualified for the earned income credit. Here's an extra $1,000. You know, the IRS doesn't tend to send those letters out very often, okay? All right, state, again, you know, when we talk about the state, You know, I know my classroom had one problem I had them do, but you know, if you have somebody that says that you know, hey, I lived in New York, and in this case, I started out in New York, and then I said, enough's enough. I have moved to Florida. Okay. You know, that would be a part year where somebody's, you know, done, you know, lived half a year in New York and said, enough shoveling snow, I'm going to Florida. And they moved to Florida. Obviously, Florida doesn't have any personal income tax, so we don't have to worry about that. But they would still have to file a New York return for those months that they lived in New York. So if they change their residency, and we get quite a few of those, okay? Now, non-resident, talking about that, prime example, my son, who goes to school in Ohio. I have to file a non-resident return for him in Ohio because he has income where he's working while he's going to college in the state of Ohio. He's not a resident there, but he has to do that. So if I take a look at my tree on the left, now I got a whole bunch of stuff going on. Instead of doing the New York State resident 201, I have a part year or non-resident return, and I also have an Ohio return, okay? So got a full boat of things going on, and our software, when you're working on it, is set up to do all states that have personal income tax returns. So, you know, it's not uncommon, and I probably do, trying to think, there's probably about 14 or 15 other states returns that I do, okay? So that's where that's in there, all right? Bank product stuff, I know that it's on there and things like that. That will be covered when you get into the offices. We do some things with refund advances. Using the words refund anticipation loans is illegal in New York State and many other states. You have to call them a refund advance. And also that there is a fee or charge for this. You cannot say that there is interest on a refund anticipation loan because that is deemed to be loan sharking, okay? So we have to be very careful. And you will go through training on the correct terminology to use on all that for all the offices for people that like to have their money a little faster than the up to 21 days for the federal return, okay? Obviously, identity is very important. All the software is going to have this. You're going to have to put in their driver's license information. Sometimes the states ask for more information on it. New York does, just to await identity proof. And then down here at the bottom, the preparer ID, you know, again, you will get your PETN. You'll have that information when you go through that, and Maria gets that to you, our district manager, okay? All right, as far as putting things in, okay, we have our 1040, and as I said, and what I'm finding as I myself and when I've shown the new software, I still like people to understand that they should really derive or get information or navigate themselves from the 1040. The new software, it's very beneficial if you understand that to do that because it obviously set up different for the new tax law. But you know, for this one, we need to make sure that you understand that we should make sure that you get comfortable navigating. The tree, I think, for those of you that may not like the tree on the left, again, you know, I'm talking about all the little things here that are on the left side of the software. I encourage you, again, get used to having that open because for 18, it seems to be very beneficial with the new changes that have come down in the tax law software, okay? First thing is, as I've talked about, I want you to make sure on your schedules A, B, D, and 4562 that you understand that you need to go to a worksheet. Those forms, the A, the B, the D, and the 4562, I never want you to put anything directly on those forms. There's always a worksheet that does the calculation for you. All right, and our first example there, and I run into this quite a bit, is on our Schedule B, okay? We know our interest and dividends go on our Schedule B, okay? So once we're into that Schedule B, we see that this is here. And again, if you have interest, this top section, all right, this top section up here, that's only used if you're holding a mortgage for somebody, okay? So the only time you're going to put anything in there is if you're holding a mortgage. So you have sold your house and you sold it to somebody that had financial difficulties and you're going to hold the mortgage, okay? That's where you put in that interest income. It is not the mortgage interest that you pay. That goes on a Schedule A, okay? I do see sometimes where people want to put their mortgage interest that they pay here. That's not. This is an income section, okay? So we want to make sure that. But what I'm saying is right here, for that other interest, we're going to click in there. We're going to hit F9, and this is where, like I said, Schedule B, inside of it is a little worksheet. And if you think about the 1099 INTs that you get, this becomes very beneficial to us, okay? Because this is everything off that 1099 INT. We can put in there that we have First National Bank, okay? And they paid us $100 in interest on our savings account, okay? All right, and on that savings account, maybe this was a CD, we had $100 in interest we made, but they charged us $5 because we cashed the CD in early, all right? And we cashed the CD in early, but the interest, we said, well, we'd like to have $25 in withholding, okay? So again, everything on this will then flow to where we need to go. All right, hold on one second. I got a question here. Can you cover 10 interest page 1512 again? Is that 1512 from David? Is that 1512 from the textbook or the workbook? Okay, let me take a look at what was 1512 here. Oh, okay, the First National Bank. Yep, I'll show you that one. Okay, perfect. All right. Okay, so we have that, and then we'll come back to the question in a second here. Okay, so on that one, we had First National Bank, and if you look at the bottom of in 1512 for the workbook, there was a 1099 INT. So if I do that one for First National, I had in box 1, I had 1456, okay? I didn't have any early withdrawal, and I had $450 withheld, okay? Now, also on that one, there was a interest on a savings bond. So what I'd like to do is I might abbreviate First National Bank, and then I will do bonds, okay? So when I have bonds interest, in this case in box 3, I have $1,899.88, better known as $1,900, okay? Again, the TSG part of it, or excuse me, TSJ part of it, taxpayer, spouse, or joint, sometimes you like to keep track of that. Now, on the state side, if you have to file a state return, the interest on savings bonds or treasury obligations is tax-free, okay? So I'm going to take and I'm going to say that it is tax-free, so I do not count, so it's negative, not count negative, okay? And I'm going to put in there 1,900, okay? What that does is it tells me, or tells the software, that this state is not obligated to pay this, okay? So if we take a look, I'm going to kind of trace and see where this worksheet took everything, all right? First thing is we're going to trace back to our Schedule B, and you can see here it is, populated our Schedule B for everything on there, okay? So that's where it comes back to the B. That's why we don't put things on the B, because now with this bonds, where does it go, okay? Now, on the state side, I guess I'll have to use this one here at the part here, okay? All right, if we look here, New York State, interest on U.S. government bonds. There's my 1900. It is a subtraction, so it is taking it away from my income. Okay, so that's where that would flow over to that. Okay, let's see here. Let me do something. 1 second. Okay, so if I'm on this one, and then as far as the $450 of federal withholding, okay, if you look right here, I put that on that form. Here it is, federal income tax withheld at $450. So everything that I did on that interest statement right here then flowed to my Schedule B. Okay, it flowed to my New York as not taxable, and then it eventually flowed to my 1040, both in the form of the income and of the tax withheld. Okay, so that's why, like I said, Schedule A, B, D, and 4562 all have worksheets so that you can get things to where they need to go. Okay, let's see, I think Tony had a question on there. Whoops. Bond interest. Did that answer your question too, Tony? Is that the bond interest you're referring to? And Dave, did that get a little bit more so? Okay, good. Perfect. Okay, so we have that. And equally on our Schedule B, all right, down at the bottom, all right, we have dividend income. So we're going to go in there. I had something I was fiddling with this one. We have our little dividend statement. Okay, and we go into that, and it gives us everything we need to know as far as our dividend. I'm trying to move everybody out of the way. There we go. Okay, so we have our ordinary dividends of $100. Might have $90 of qualified. In this case, we're not going to have anything in there. Okay, again, has all the categories that we would need for everything. The one that you may see is an exempt interest dividend. And again, I talked about the fact that some things on the state are not, because the states will only allow exemptions, exempt bond interest or dividends if it's something that relates directly to their state. Prime example, state of New York, if you have exempt bond interest, it might be for the state of Ohio. You got to pay tax on that in New York because it's not their state bond interest. Okay. So we have that. All right. Let's see here. Kind of, like I said, a little review here. So we talked about that. This one right here is another one where people tend to stumble, and that is, what do I do with the refund from the previous year? Okay. Really, the way to look at a refund for somebody, I realize that if you go in here and everybody likes to take a look and says, oh, great. Well, he tells us always to find the worksheets. There's a worksheet in here. Well, this worksheet is great, but you have to have the previous year's information, okay? Yes, we know their state refund. They may tell us, or we can look it up, but there's a lot of things here that have to do with the previous year's return. So if you have a returning client, this is a very good worksheet to do because their information will carry forward for you from 16 to 17 or 17 to 18. But if that's not the case, you need to know what to do. And this is where some of the exercises, and I know on the midterm we kind of talked about it, we had to talk about what this is. So if somebody itemizes and they had a state refund, we have to decide whether that is taxable or not, okay? The best way to look at it and the best way to figure it out is, I always tell everybody, this is what really drives that, okay? So if I go to my state refunds here, and I had a state refund down here at the bottom, but I had a refundable credit. And really what I'm talking about is, let me just get my little drawing tool here. If I had anything from one of these areas right here, these refundable credits, okay, I am basically going to subtract that from my refund, okay? Basically, they're not going to make you pay tax on a refundable credit. So, best example, and we always use it in our problems, is the Empire State Child Credit, okay? So if I have a $500 state refund from the previous year, but the reason I have that refund is because I have 2 kids, and in New York, that's $330 per child. That's a $660 state refundable credit. All right, so basically that would wipe out my taxable amount of my refund, okay? Because the 660 is greater than the 500. All right, so that's the way that that works. These refundable credits, that's the way that they back that out, okay? Now, if I don't have anything here, then yes, my refund, my state refund is taxable on the federal side, all right? So that's really where, you know, you have to know your law and know the way that that works. And in each state is a little bit different. You know, again, I'm using the state of New York as an example here. If somebody doesn't file a state return, as in Florida, then we don't have to worry about it, okay? So we don't have to worry about anything there. All right. Okay. How do you enter this? The workflow. Okay, as far as how to enter it, well, this is where it's a little quirky again, okay? And I understand that, you know, this is sometimes where people get, you know, frustrated with the software, and I can fully understand. First time I worked with the software, this one drove me nuts. I do not like to see red on my tax return, okay? I feel like I'm doing something wrong if I see red, okay? And you know, that's just me, and you know, to me, the red draws attention, says, hey, there's something wrong here. You need to do something. Well, in this one, a lot of times, after you check this box, if you hit the tab twice, you should be able to enter it in there, okay? If you can't enter it in there, and again, this is the only time I am giving you permission for this, okay? I stress this, all right? This is the only time that I'm going to let you use this button on your keyboard, and that is the F8 button, okay? So you are allowed to hit F8 to override it and put it in there. I know sometimes it gets you where it says calculated entry and it won't let you type into it. Well, that's where sometimes people end up on that worksheet, and then they don't, then they get the snowball starts rolling down the mountain, getting bigger and bigger, okay? So this is where I would give you permission to do that. Now, if I find out from your supervisor or where you're working that you're using your F8 key for anything other than this taxable state refund, line 10 on our 1040 here, I will come and I will take the F8 keyboard, or F8 button off your keyboard, okay? Because I don't want you to get me in trouble. So I will take away your F8 key, all right? Because it's the only time you get to use it. But like I said, if you do this, all right, and you check the box, whoops, check the box, you hit tab twice, put you into there, then you can enter the number, okay? So that's where you're gonna be able to do it. Now, when you override, it may look like this, but that is fine. That is fine, okay? That's not a problem, all right? Okay, so we have that. Capital gains, well, let's do, we're gonna kind of move through here, okay? Business income. So if I have somebody that's self-employed, I'm gonna go to their Schedule C. I'm gonna open up that Schedule C. All right, and again, you gotta get used to filling this out. Be very conscious of your business code. Like I said, you have some that are references in your, you'll have little, let me grab mine here. You have, in your offices, you'll have the little tax books. You know, they're pretty thick, but they're a nice little thing with the tabs. We'll have what they call quick finders. In those, there's little tabs that you can go find the business code. You can go to Google, check it out there. You know, obviously Google's our friend, but NAICS, that's what that code is. So you can type in NAICS code and the name of the business, and it'll give you that code to put in there. The code is very important for 2018 because of the QBI, or the pass-through, the new law where they give you 20% of your net profit from your business tax-free, okay? And it is really driven by that business code. Obviously, you have to finish out all this. Did they participate? You know, we talked about putting there the gross receipts. I realize when you go in here and hit F9, there is a place to do miscellaneous, to do the 1099 miscellaneous. I'd much rather have you, especially if you have somebody that is an independent contractor and has 5 or 6 1099 miscellaneous, I'd much rather have you do it on the scratch pad. Typically what I'll do then is I might have my little scratch pads. I don't know if anybody's discovered these, some have. These do not print anywhere and do not go in with the electronic filing. They're just really a scratch pad. There are notes for you, okay? So I might do 1099 miscellaneous, and from EG Tax for $1,000, and I might have a 1099 miscellaneous. I did some work also for the IRS as an independent contractor, and I did 2,000. Okay, so that little scratch pad I did, when I go back to my Schedule C, it will add everything up for me and put it in there. That's the reason this is yellow, because that means that there's content in there. Okay, and again, that scratch pad shows up on the tree. It would show up as far as printed out for some various file copies, but anything that goes electronically or to the client, it does not show up on there. Okay. Expenses, like I said, most everything on the expenses. The big thing is, and I saw this already with my classroom and the people from online, like yourselves that took the exam, car and truck expenses. If I go here, you're thinking, oh, I got to put something in there. If I hit F9, okay, there is a vehicle worksheet, all right? That is a great worksheet, but the only benefit to that worksheet is if you're doing actual. If you look here, remember we talked about our 53.5 cents a mile. These are all the things that make up that 53.5 cents a mile. So that's great if we're going to do actual. But most of the time, okay, I go back here and I go back to my square and I hit F9, I want to go to page 2. All right, so you can do it this way or you can do it this way. And on page 2 of my Schedule C, here is where I do my mileage. Okay, so somebody for their mileage drove 9,000 miles for the year. Okay, it was a car that they bought. They got it as a Christmas gift in 2005, okay? And the reason that that's important so that they know that you're doing the same method. Well, I got my 9,000 miles. The vehicle was used during off hours. Charlie Brown's not married. And he had evidence. He gave me a list that he and Snoopy had put together. So we had all that. Now, got my 9,000 miles. It seems like I should be done, okay? But when I go back over here, whoops, where did my mileage go? And this is what I see as an error quite often, okay? If you read right here, it says check box to calculate business miles at the standard mileage rate of. This amount will be listed on page 1, line 9. Ha! So I need to do that. It will calculate for me based on my little embedded worksheet that's on the Schedule C. And if I go back to my Schedule C, page 1, then my mileage carried over. And this is where, like I said, I saw this error quite often. People would put the mileage in on the final, and all of a sudden they're short on their refund because they forgot to check the little box to have it move over to the Schedule C, part 1, or excuse me, part 2. Okay? So we have that. Now, here's the big one. Okay? And this is where, like I said, on a Schedule C, depreciation. All right? We're going to go in there. I am going to depreciate something. I bought a brand new widget maker, okay? And it is the best widget maker in the world. So I had to pay a lot of money for it. And Charlie Brown is making widgets. So we're going to go into 4562. And again, this is one of those forms, all right, that we have that is for our depreciation. Now, the only thing we're going to put in there is what activity. And as I said, we have a widget making. That's Charlie Brown's business, okay? Now, for this is where the important part is. In order to do the depreciation of my asset, if we look here, description of property for accurate computation F9 to worksheet, okay? So again, I am looking right here. This is where my important part of this sheet is, okay? This sheet, if you will, becomes a cover letter for your depreciation. All the things that are supporting that cover letter are behind it, okay? Or on a worksheet. So we're going to use that worksheet to do this, okay? So when I go into this, I find my little asset worksheet, and this is the best thing about the 4562. Now I have my worksheet, okay? So I can put in there, I have my widget maker, all right? And again, it is, let's see here, we're going to do, all right, machinery and equipment. And again, picking the asset type is very important because it gives us our useful life. We bought it and put it in service at the beginning of the tax year, okay? And that widget maker cost us $5,000, all right? And all of it was used for business. As we can see, it's 7 years, and it starts to calculate, and it's a half year because of the date, so we can take the depreciation. Now, because of the asset type that I selected, I have an option of taking special depreciation or a Section 179. Again, this is our pie. We've made our pie, and we've decided that we have a very nice $5,000 pie. How are we going to eat this pie? Am I going to eat it as, okay, am I going to eat it this way over 7 years? Okay, am I going to eat it, half of it this year, and then a little bit of it for the remaining 7 years? Or am I going to take it as a Section 179 and I'm going to eat all of it? Okay, so these are those three options we saw in the depreciation chapter. Okay, we can eat it a little bit at a time over 7 years. We can eat half of it the first year, and then whatever's left over, little pieces through the remainder of the year. Or I can take and I can do the entire thing under the Section 179 if it's eligible. And in this case, you can see that under the Section 179, it says that right here, it's checked, yes, it is eligible. And that's because of the asset type that I selected in the business that I'm in. All right? Okay, so I've decided I'm going to eat half the pie this year. Okay? So what that does is it does some recalculating. You can see that up here, it took half of it as an expense. Okay, so I took $2,500 as depreciation, and then I depreciated the remaining balance, the other $2,500. So half of it is started to depreciate here. Okay, so let's see what that did. All right, it did a couple things here. If I go to my 4562, you can see I have special depreciation. There's my $2,500, okay? And then here is my 7-year property, $2,500, and my depreciation amount, okay? Now, equally, if I go to my Schedule C, those two are added together on my depreciation line. $2,500, so I took that half depreciation, plus the first year's depreciation of $357. So it got calculated over there correctly, okay? So that's the way that that one would work. All right, now, we decided that that's not what we're going to do. All right, I'm going to Section 179 this. I want to eat the whole pie the first year. So I'm going to go in there and I'm going to go all the way to the bottom, and it says on line 5, 179 election amount for this property. I'm going to go $5,000. So I'm going to take the whole thing, okay? Now, once I do that, you can see right up here, what's left is my basis. Nothing. What future depreciation do I have? Nothing. What special? Nothing, because I took it. I took the whole thing, okay? So once I do that, and again, we're going to flow it back to the 4562. All right. I see my widget maker, and I did my election there. It says 179, so I took the whole thing. Doesn't show any special, and it doesn't show down here anything on my 7 years because I took the whole thing. All right. And then you can see on the depreciation, all right, it took that election, okay? All right. I didn't have enough income. Let's see, hold on 1 second here. Okay. Reason it excluded it because I didn't have enough income in there, so that's why it didn't show up over here. So now my income allowed me to take it. Okay. All right. So we have that. Okay. Okay. Good. Thanks, Dave. All right. So we have that. Okay. So that's where that works. And like I said, I'm going through some of this because of the errors I've seen and problems that you guys have turned in, and the things that I've seen as errors on the final exam. Okay, so that's our Schedule C. Now, also remember, Section 179 does this for us. And it says here net profit for 179 deduction. Again, we have to have a profit. The other thing we have to have a profit for is business use of home. Okay? If I have 1,000 square feet of an office building that I'm making widgets in, you can see that I do that. If it's 5,000 square feet building, I am not going to get to take it. Oops. Okay. I may not get to take it because of the excess on it. Okay. So we have to make sure we understand that there's limitations on some of these when it takes as far as the 179 in the home office. Okay. All right. Let's see. Moving down the 1040, other errors, things that we've seen. Oh, capital gains. Okay. Schedule D. So if I'm in there for Schedule D, again, this is one of the forms. I talked about the B. I've talked about the 4562 because of the depreciation, that worksheet that we just did. And I'm going to talk about the Schedule D. Okay. So on the Schedule D, we have all this, but there is never anything put on the D. The only thing that you might do on the D is if somebody's a new client and they have a carry forward loss, you can type that in there. And I think I've mentioned several times that if you have a green number, that allows you to enter things. If you have a yellow number, that means it's a calculated entry. In this case, I want to know how it's calculated. It's a yellow one there. So I'm going to hit F9. This is where I'm going to get my capital gains worksheet. So this is always what you do. Nothing goes right on the Schedule D. You put things on the worksheet. And again, I don't know why it does this, but you got to scroll up a little bit. So this is our characteristics on there. So when you get a 1099-B for investments, and I might have something come from, let's see, Snoopy has a business that he has. Okay. And I had some stock that he gave me, and I found out not doing very well. So it's short term. I had the basis reported to the IRS. So I bought it July 1st of 2016, and I sold it right after the first of the year of 2017. So I was short term. I sold it for $1,000, but it cost me $1,100. So I have a loss. So this is where we put that in. If you notice on your tree on the left, what happens is over here on the tree, here's all the information about that. Okay, so we have that. We did the worksheet, but it also made that 8949 that we need to report. Again, capital gain worksheet doesn't go in electronically. The 8949 does. The capital gain worksheet is an internal thing for us to be able to make sure that everything gets to the right 8949. Okay? And again, once I've done that, I go look at my Schedule D, and everything comes over just the way I want it. Okay, so again, Schedule D, find that worksheet. You can find it by finding a yellow number. Okay, if I go here for my green number and I hit F9, don't really have what I want. It doesn't have that worksheet. Okay, I need to find a yellow number. So if I go to a yellow number, then there I can see my capital gain worksheet. Okay, all right. Okay. Let's see here. We talked a little bit about IRAs. You know, if we go in there and we have the retirement, you know, one thing to realize on retirement accounts, to make sure that you get the correct code in. Okay. Now, if I have a government pension, Office of Personnel Management, I have a military pension of $5,000, it may not give me the taxable amount. Okay. What I would do then on that one is I would go down to my simplified method. Again, a lot of times government pension, especially from the Office of Personnel Management. So I have my $5,000. Snoopy took this as an early retirement. He used to be a postal worker. He gets 12 payments. Okay. So based on that and his age, it calculates the taxable amount for me on that simplified method. If I look at my 1040, page 1, I can see distribution, taxable amount. Okay, so distribution, taxable amount. And note up here, here's my capital gains and my business income, all the things that came over for me. All right. Last thing is gambling weddings. I don't know if many of you are gamblers, but we seem to have quite a few. I will tell you a quick story about gambling weddings for those of you that are over 65. I'm helping I will call her a young lady, but she is over 65. She has $20,000 of Social Security income, and her Part B comes out of there, her $135.50. However, for 2017, for 2019, based on her 2017 tax return, she is getting a thing called IRMA. It's an income adjustment based on your income that you pay more for your Part B, and they will charge you for Part D. She could not believe this was the case, that she was going to have to pay an extra $500 a month for her Part B and D. $500, an extra 400 and some odd dollars a month. Well, the reason being is, on line 21, she showed gambling winnings of $248,000. So they added that to her gross Social Security and it increased her Medicare. And she informed me, says, well, I don't have $248,000. I lost $256,000. Okay, so she was in a losing proposition. So that being said, Social Security goes, I don't care how much you lost. It says you made $248,000. So we're fighting it right now. We're trying to help her. And the moral of the story is, be very careful when you turn 65 and you have extra income if you are a gambler, because that means that the Social Security Administration is going to want you to pay more for your Medicare coverage. Okay? All right. So line 7, we're going to hit F9. We're going to get a great little worksheet in here. And again, this is one where we have to be careful with the gambling. All right. If they have a W-2G, okay, if they have a W-2G, they will be up here. Okay. You can see I have a yellow number. So that means I have something in there that is going to help me. Chances are it's a W-2G. Okay. If they just have and said, I won $5,000, we're going to go down here where we have this kind of miscellaneous where we can enter it however we want. Okay. So if they just says, yeah, I won $5,000 at the casino, but they don't have a W-2G, well, we're going to enter it a little bit differently. So if I have a W-2G, I'm going to go to my yellow number box, light it up. Sure enough, there's my W-2G. Okay. All right. On that W-2G, I might have had $5,000 I won. All right. But I'm going to say that I had $6,000 in losses. And again, this down here at the bottom, gambling losses to be transferred to Schedule A. Well, we know from our studies that $6,000 losses, we can only take losses up to and equal to our winnings. Well, if they're on a W-2G, it will calculate that for us, okay? So even though I entered losses greater than my winnings, you can see right down here on that Schedule A that it capped it, even though I put in 6,000. So that's helpful, okay? Now, however, if I go back to my worksheet and I put in gambling winnings, okay, and I want another $1,000 that I didn't have a W-2G for, okay? So I put that in there as gambling winnings, all right? Go to my Schedule A, I'm thinking, I put in 6,000, I should be in good shape. It didn't add it. That's because if you put it on that other line, it doesn't know your losses and there's nowhere to put it. So you have to physically go in, get your other deductions, okay, and add the 1,000 to that there. You have to manually enter that in there, okay? All right, so that's why I say if they don't have the W-2G, sometimes you have to do that, okay? All right, so we have that, and they have to manually enter that, okay? As it says here, you're using a statement, check here and manually enter. So we did that, all right? Let's see here. We have that, it says see statement for things. Make sure on your educator expenses that you put those in, student loan interest, IRA deductions, student interest, you know, all those things. Tuition fees deduction. I know when we did the one problem, we talked about the fact that somebody that's a graduate student that had the lifetime learning credit, that it was much more beneficial for them to take the tuition and fees deduction instead of the lifetime learning. However, in the spirit of the golden ice cream scoop, you cannot double dip. I have not decided who's going to get the golden ice cream scoop this year. I did award it in my classroom session for those that took the double dip. But in this case, I have not decided online. There's 2 or 3 people that are in the running. I won't name names, but I will make sure that you do get it, and I'll make sure that it's engraved with your name. But basically what I'm saying is, if you make the decision and you're doing the comparison, make sure that you don't leave it in both spots. The software will not know that those are conflicting. They don't know that they're for the same person, okay, or same situation. So you have to know that, make sure that you do that. So if you take it out of the lifetime learning on the credits on page 2, make sure that you're going to compare it. If you're going to put on the tuition and fees, take it out there, and vice versa, okay? So make sure that you do that, all right? Let's see here, Schedule E. I forgot I skipped over there, sorry. All right, so we got rental property, okay? Now, here's the deal, and I don't know if anybody's done this yet. I did have one person that took the final that did end up doing it, and you know, basically I said to him, really the only option for you right now is to delete your Schedule E and start all over, okay? What I mean is that when you go into Schedule E, and especially starting here, if I hit F9, do not hit the Rental A worksheet, okay? This is the case, as I said earlier, if I find that you're overriding things, I'm going to take your F8 button away. If you start clicking on the Rental A worksheet and creating a return that is very difficult to carry forward, I'll come and take your mouse away so that you can't click anymore, okay? So those are 2 warnings from me. F8 button, don't use it, or I take it away. And if you start clicking on the Rental A worksheet, I'm going to take your mouse away, okay? And for those of you who don't have a mouse, I'm going to disconnect your little touchpad on your laptop, okay? So do not use this. I know it is a great tool. It looks like, hey, this is wonderful. I can do 50%, this and that. Don't. Enter everything on the Schedule E. Do not use that worksheet. I know for some people, they got to here and they said, wonder what the type is. And they hit F9. There it is again. I wish they would just take it out of the software, okay? It pops up in every box that you go to. No matter where I go, it pops up on the Schedule E, okay? It's everywhere. And sometimes it's the only choice. And I know I've gotten you used to going in there, hitting F9 and seeing what's in there. But this case, make a note on your Schedule E. Do not touch the Rental A worksheet, okay? For the fear of losing your mouse, all right? And if anybody's tried to use Windows without a mouse to click, it would be very difficult, okay? So everything goes right on here with the exception of depreciation, okay? Depreciation goes on our 4562, but not directly on our 4562, okay? The other thing that we have here, and sometimes it's hard to find this other, it's a great spot if you have some things that don't fall in the categories, and it has a nice little worksheet, kind of like a scratch pad, I guess more so, that you can describe things, okay? Sometimes this is where I'll break out utilities instead of putting them in there. So I might have trash, and they had $100. They have a user fee for $25. And this is maybe where I put in the water, okay, for $75, all right? Gives me a little bit more detail. It shows up on my tree. We'll carry forward, so it will be there for the next person. And then it gives us a nice little total there of other. It may say the first one, but that's where we can put that on there. Rather than the utilities, you could go to the utilities if you wanted to. And again, be careful what you click. I don't want to take your mouse away, but you could do a scratch pad there, okay? All right. So we have that, okay? Make sure on depreciation. And again, there it is, pops up. Do not touch it, okay? Never, ever, 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 ever touch it, okay? All right. So if we go in there, we have our 4562. Again, we're going to go to that, get our asset worksheet. Okay. So we have that, and this is Charlie Brown owns Snoopy's house. So he's renting Snoopy's house to him. Sorry to use the cartoon characters, but that's what happens when you become a grandfather. Things start reverting back to things that you're familiar with. We have our residential rental. Okay, we bought it back in, we got it for Christmas in 1999 for Snoopy. And again, this is property A. I haven't listed it yet. All right, so the mortgage we hold on the house is $25,000, or excuse me, the cost of the house is $25,000. All right, so we have that. Now, land value. If you don't know it, rule of thumb, take 10%. Okay, that's kind of the rule of thumb. All right, 27.5 years. And for rental property, we're always going to use mid-month. Okay, and again, I apologize, but that's just the nature of the software. Prior depreciation, you get to do those skills that I talked about during depreciation. You go find that little table that's in your workbook, and you bring that out, and you're able to calculate the prior depreciation. Okay, and obviously, this is the type of property that is not you cannot do special depreciation or Section 179. Okay, all right. Now, little trick here. Okay. On the 4562, okay, this is going to be Snoopy's house. Okay, so that's my description on that one. Now, if I own a second, in this case, Charlie Brown owns a second rental property. All right. And he also owns Peppermint Patty's house. Okay, so he has a second property. All right. Rather than keep adding to the 4562 that you see on the street, you see on the tree on your left, I'm going to make another. I realize this one's here, but I am going to make another 4562. And this is Peppermint Patty's house, okay? Once I do that, if you look at my tree on the left, it keeps it clean, okay? I have a client that has 38 rental properties, and the return that I inherited, somebody did 14562, and then everything for 38 rental properties was listed below as an asset worksheet. Drove me bonkers, okay, because I didn't know what went with what. I looked on the list for 38 properties, and I had 25 refrigerators. And I had to go each asset worksheet and figure out which property that refrigerator went to. In this case, because I'm doing a separate 4562 for each rental property, I can tell underneath it on my tree on the left what it relates to. As you can see that it says parent, and as far as what that form is it comes from, okay? Just makes it clean, all right? Okay, so we have that. That's a little thing on the rentals, talking about. Make sure that if it's a duplex, I'm sorry, let me go back here. We have, oops. Okay, so in this case, Charlie Brown is always in trouble, so he's going to be sharing Snoopy's house. So Snoopy's house is now a duplex. I can hit 50% here. And that way it will calculate after the land value that my basis is 50%. Okay, so it'll allow us to do that. All right. Okay, let's see. Trying to think what other things. We talked a little bit about adjustments to income, the tuition and fees. Itemized deductions. Again, you know, you can get on your tree on your left, or you can go in there where the standard is, because Snoopy's had a household with Linus. But we go in there, we can get our Schedule A. All right, so we have that. The big thing about this one is there is, for medical and charitable, there is that little detailed worksheet that we can put that in there, okay? So we have here where our medical, whoops, excuse me. We have our medical expenses up here at the top. We have our cash contributions. We have our other than cash. So we have church. Down here we might have goodwill, you know, giving goods, shirts, old clothes, whatever. Those are listed down there. Okay, so there's a little worksheet for that. All right. Let's see. Education credits. Again, you know, when you have here and you see the word form, know that even though that's a green, I can go in there, I can find my form. Okay. If we know where we have a credit but we don't see it, we can go down to the other credit line. We can see, you know, adoption credits, first-time homebuyer credits, different things like that. Okay, so we have that. This is where our additional taxes, self-employment tax. Remember that money that Charlie Brown had made widgets. There's that. There's our tax withheld. Okay. And if we want to make estimated payments, all right, if we made them, we're going to go here and federal or state taxes paid. Okay. So we have our federal and state taxes paid. So you can see here, I got all my states if I'm making estimated payments. If I had a balance due to the state of New York and I owed them $415 last year and I paid it, that's where that's going to go, okay? So it's going to go there off of line 65. Now, talked about estimated payments today. So we get done Charlie Brown owes a whole bunch of money. I can go up and hit to the add a form up here at the top. Okay, so again, if I'm on my, wherever I'm at, up here, I clicked on add a form. All right, and you can see here there's a little sheet for estimated taxes. Okay, so for the estimated taxes we have here, all right, we can go in here to have here where we can fill this sheet out. Okay, all right. All right, so we have with the return here, okay, we may have some estimated taxes on this, okay? All right. All right, hold on one second. I'll be right back. All right, so let's see. We're on here about estimated taxes, and this is one of the things that we talked about today. This is where, as it says, it's a 2000 estimated tax. So if I'm Charlie Brown and I think, well, I'm going to make a good year next year, I'm going to make $10,000, all right, in estimated tax or in self-employment. Okay, well, I can say that, you know, based on that with the self-employment tax and you know, the such there that, you know, we can take a look and we can put the different things in there that we would have that we, you know, for income, if it's just the self-employment tax and what we might have to do and calculations on that. We can see in there that, you know, 96 bucks, you know, that's what we're going to do. Now, I have a $354 refund, okay? I could take and say, I'd like to take all that, put it towards my estimated payments, okay? So, and on this case, that money was used up, we applied it, and then that would be the refund, so we'd apply it to our taxes, okay? All right, so that's where the estimated, and as you can see here, then it would print out for them when you do the return, little slips for each of the one vouchers. This is the one that's due for the first quarter. This would be the one for the second quarter in June, and they would have had the estimated payments. All right. Okay, so we have that. Let's see here. And come to find out, Charlie Brown brought this in, and he says, you know what? He comes back in to do taxes for the next year. And when we come in, he says, you know what? I forgot to give you some gambling winnings for last year. We need to amend the return. So what we're going to do is we're going to go up to our add a form. And this is where we talked a little bit in the chapter today about the, and we're going to find anything that has the letter X after it is an amended return, okay? So in this case, we're going to find our amended return. We're going to open that up. It's going to ask us the question, you have chosen to amend a return. Are you sure that this is what you want to do? Well, yes, it is. I would like to amend it because Charlie Brown forgot to tell me about his extra gambling winnings, okay? Or he might have got a letter. Now, once that 1040X opens up, the very first thing I do is check this box. Do not pass go, do not collect $200, okay? Check that box, turns this first column gray. Now, I am ready to amend the return, all right? And we would do the same thing if we had the state, all right? I'd go to my state return, add a form, okay? And I go down through here and I can see here's my amended return. I'd open it up. Check this box for the override, and I can say that I did file a federal and I've overridden everything. Now, what I'm going to do is I'm going to go in and I'm going to make the change, okay? And I'm going to put it right on the original return just as if I was continuing. So there were additional gambling winnings of $1,500 that he forgot to tell us about, okay? So if you take a look, I have on my amended return $1,500 I added to it. So what really happens is the 1040X is a 2-page cover letter for the new return that we're going to do everything on the 1040. Because if I look at my 1040, you know, I had 6,000, so I had another 1,500. It's in there. I did it right on the original return. And in this case, $1,500. But when it's all said and done, all right, didn't change anything. All right, I don't owe anything. And I don't have anything as far as a refund. It would tell right on there. If I did have a change to the 1040, on the next page, I would type in my description. Okay, I have additional gambling winnings. All right. Okay. All right. And that's the way we would do that amended return. All right, so everything would be right on there. Okay. All right. Okay. All right. Any other questions about any other topics? I kind of covered some of the stuff we did today. Kind of went some things. Anything else anybody's kind of unclear of? I know, like I said, I tried to hit subjects that were topics that we had. You know, I've seen with errors on things with returns and such. Anybody have any other things? Go ahead and you can pop on the microphone if you want to. Ask away, or we can do in the chat, which I got one in the chat. Line 69 on page 4. Okay, so let me change this return here to a New York one. Okay. All right, so we had a question on line 69, New York City school tax credit. If you have somebody that's in New York City, is that the question, Tony, about the New York City? Okay, so IT 201 line 69, page 4, that's a New York City school tax credit. Is it a different line? Is it the line about the real property tax credit, line 67? Okay. All right, so this is a credit, and again, this is a credit I have on here that they took. This is a credit where if somebody's paying rent, it's better known as the renter's credit on New York State. We have the tax credit here, and typically it's somebody with lower income. In this case, right now I got Charlie Brown making $16,000, and this form is, we have on there, and the questions that we're going to fill in is really on page 2. Okay, well, let's get the ones on page 1 first. Okay. So we have to answer these questions that would be read. Did you occupy the same residence for 6 months? Yes. Do you own real property of more than $85,000? No. And you don't reside in public housing or a nursing home? You'd answer those. Okay. So once we answer those, we go to page 2, and basically this credit is right here, and it's part 4 for renters only. All right, so we have that credit. They pay rent, and it doesn't include any of the utilities, and they paid 12 months. So in this case, they're going to get a renter's credit. What the renter's credit is it's a small credit for people that are renters, that since they are helping the landlord pay property tax, they get a credit just like the landlord does on the property tax. Okay, so that's where the renter's credit comes in. But again, the threshold is very, very low. You have to have a lower income. And the other thing is, whoops. All right. If it's the case, as you see right here, okay, if I put in here, and if I say that they're paying $525 a month in rent, they don't get it. Because as it says here, average monthly adjusted rent, if more than $450, stop, you do not qualify. So again, lower income, very low rent on somebody that has something. Okay, all right. Okay, does that answer your question on that, Tony? Okay. Yeah, it's one of those, it's a little nuance in there, and it's a great little credit to find somebody. And again, if somebody's lower income and their rent and they're living someplace where they're paying $400 a month, you know, it's a great little credit because $100 is a lot of money. Okay. How long should we allow for the final exam? Well, Cheryl, I did the final exam problem and it took me 17 minutes. And yes, you can use your book. Okay. All right. But I don't expect you to do it in 17 minutes. So it's a problem. There's not really any itemizing on it, so you don't have to worry about the Schedule A. Most of the time for everybody, that the snagging points and stuff was the Schedule C and the Schedule E for the self-employment and the rental income and getting the depreciation. Most everybody's been finishing in about an hour and 15 minutes, an hour and a half is what they've been allowing. And yes, it's open book, and when I say open book, don't be afraid to have access to returns that you've done or seen me do. I know one person, they had a question and they said, hold on one second, I'm going to go watch the video and see how you did that. So obviously you got YouTube, you got me, you can ask questions. Like I said, we'll have you on the Zoom. I'll have you on my desktop if it's during the day or whatever it may be, if I can be access to it. You have Google, basically the only thing you can't do is hire somebody else to do your final exam for you. Okay. So that means that you cannot call one of your classmates and say, hey, if I give you $50, will you take my final exam for me? Okay. So, but all other things are on the table as far as resources that you could use. Okay. All right. Any other questions for anybody? Okay. I know we've covered a lot of material. Like I said, I hope that it's been good for everybody. You have the YouTube. I don't erase those. You have your books. Can't emphasize enough, though. Like I said, I need to know and have you make sure that you let me know about the work forms. Like I said, there's a few of you I have not heard. I will send something out to remind everybody, but I need you to make sure that, just checking my list here to see, that we have, get those in. If you have not scheduled your time for your exam, make sure you reach out to me. Like I said, I have times that I sent out. I'll resend that as far as Monday the 17th and Tuesday the 18th for you to come into the office. I kind of have some time set aside so I can be available for you. I know, I've had 2 or 3 people actually come in and sit down with me prior to the final exam and, be able to put in there. Let's see, Dave, Monday at noon open. Do you want me to put you in there? I got you down. So Monday the 17th at noon. And again, make sure we did move. Our new corporate office is 1890 Colvin Boulevard in Tonawanda, 14150. Okay. All right. I do have coffee. However, my last week, my other classes, they ate all the graduation cake. So there's no cake left, but I do have coffee. And on occasion, there will be donuts, okay? Seeing that my wife works for a bakery company and we tend to have a lot of donuts come to the house, and I almost can't eat another donut or another pie or whatever else she brings home that her clients give her for us to sample. I've eaten my share, okay? Time to make my New Year's resolution. All right, so if there's any other questions or anything, let's give you a few minutes here. And again, don't hesitate to pop open the mic. We can do that as far as everything there. Okay. All right. And again, I've enjoyed having everybody in class. I hope they benefited from this. whether you work for us or not. I hope it has been a benefit to you. And again, I'm always here as a resource. I have, I guess you would call them alumni, students or alumnus that have still contact me with questions, whether they're working with us or working somewhere else that have taken the class. So, all right. So again, make sure you get the time scheduled to take an exam if you're required, and you're going to take it to work for us. That's the closing of the loop. And make sure you get those work forms in for us. Okay. All right.